Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the choppy session on Friday first views the US dollar. As we can see here, since it reached a peak around 92.8085, has backed away from its this year's March highs around 93.45, which was just a handful of points away. Nevertheless, the pullback has actually paused, and therefore keep a close eye as we could see a return to the top side. As I view, the market is still destined to its target of 93 figure 60.65. As I mentioned, this year highs around 93.45. That in terms would see the euro continue its downward trek, although at present the market has found somewhat bullish momentum as it breaks over the midway point on the RSI and the MACD just confirming a weak positive signal. So for this week, I'll be looking up towards 119.15 as a potential cap, but do allow a little bit of an extension to 119.60.80 area. But as I mentioned, the dollar index, which does measure the greenback strength against the past 6 major currencies and weighted to the euro at 57.6, can still take a dramatic downturn, as I'd still feel that, as I say, the dollar index is still potentially holds a bullish bias on the broader assessment, that is. Looking into this week, we do have the US Federal Reserve Chairman Jerome Powell's testimony on Capitol Hill, and also we've got an update on the US inflation data, which could give us a bit more volatility. If so, the market does fail to the top side, as I recall, is still maintained from last week at 117.50.80. Looking at the Australian dollar, well, the market reached its objective last week at 74.20, and then I highlighted there was some bullish divergence, which has snapped back into a bias to the upside, that is, due to the engulfing candle. However, confirmation is required to this candle, and we would need to see a close above 74.95 area, where I just highlighted here, just above here, to support the next upside target, which is around 75.60.65, with the cap still holding close to around 76.05.15. In light of the pattern, although the MACD is strengthening to a potential cut to the upside, and that would give us a positive signal, we do need confirmation quite right across the board. That is from the RSI, as it's holding or flirting with the midway point at 50, and also we need that close above 74.95. Now, if that happens, then I would probably sway further to the bullish case and see that those upside targets, first of all, at 75.60.65. The dollar yen also rebounded on Friday from its objective, which was around, in the short term, at 109.60.70. Now, from that bounce, the market's just recaptured that 110 handle. In line of its potential upside, I feel that there is possibly a little bit more of a stretch to 110.35 with a cap at 110.85 for this week, and we could see a retest to the downside. And the reason behind that is the RSI is still underneath the midway point, and also the MACD is holding to a negative signal. But like previously, the break to the upside of that channel fell away, and as I was calling last week, the break to the downside channel could be short term as well. But let's see, first of all, if we can break above this line, which doesn't look at this point likely due to these given signals. A very strong bull candle came out of the sterling on Friday after rebounding off this previous challenge level of 137.40.45, and now puts in perspective a possible move up towards 139.60.80, where I've outlined here. I feel that could be where the cap may be for this rally. Keep an eye on the market though, because the RSI has broken above along with the MACD to support a positive signal. Hence why I feel there is at least about 70 points left on the upside before any reversal. This would in turn see the sterling yen look up towards 153.70 after rejecting of its objective of the objective, that is at 50, 70, 75. So a little bit more upside, but I feel the market may struggle because of this strong outside range day. Still is in focus with the MACD still negative. The RSI is not holding a very strong positive signal. Finishing up with gold, well, the market's still in a bit of a lackluster price action, and the longer we maintain in this pattern gives further risk to the downside. However, for that call to happen, we need to see a close under 1,786. A close underneath there would reinstate the downside to 1,760, but I would like to see a little bit more confirmation from the technicals before giving that call. While remaining above 86, the upside target still pretty much in focus for the moment at 1,833 to 35, or somewhere around that 1,830-35 area where I've outlined here. Finishing up with oil, the market still holds to this key reversal, even though we did see an interesting rebound of the support level that was called to the downside from the key reversal at 69.50 to 70.20. Now, as long as we don't get a close above 75.0515, we could see another challenge to the downside because the technicals are still swaying down and the MACD is still holding to a negative signal. Well, that's a wrap for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the new week.